watching Mining Headlines of the Week. I'm Devin Murrigan. Thanks indeed for joining us. Canadian miner First Majestic Silver is acquiring fellow Canadian company Gatos Silver in an all-share deal valued at $970 million. The acquisition will give First Majestic control of high-grade silver deposits in Mexico's Los Gatos district. Gatos shareholders will receive 2.5 First Majestic shares for each Gatos share, implying a premium over recent stock prices. The merged company is expected to produce up to 32 million ounces of silver equivalent annually. Gatos shareholders will own about 38% of First Majestic's shares after the deal closes early next year. Now, iron ore prices fell to their lowest levels since 2022 this week, trading near $90 a ton. China's steel industry has warned mills to be cautious about increasing production too quickly, which could hurt a potential recovery. The steelmaking material has dropped by over a third this year as weak demand continues to pressure Chinese mills. The China Iron and Steel Association expects some improvement in demand through September and October, but advises against ramping up output. Meanwhile, iron ore futures in Singapore dropped 2.4% this week, hitting $90.35 a ton on Thursday, September the 5th. The wider commodities complex is suffering amid concerns over China's recovery. And of course, you have those uncertainties in the United States and the global economy. Canada is investing almost $8.5 million Canadian dollars to boost critical minerals recycling. The move aims to support the electrical vehicle supply chain. Two companies in Kingston, Ontario will receive funding to develop recycling technologies for rare earth elements and graphite. Cyclic Materials will get 4.9 million Canadian dollars to build a plant that produces rare earth oxide and a cobalt nickel product from recycled materials. Green Graphite Technologies is receiving $3.5 million to advance its technology that transforms used graphite for reuse in batteries. A weak lithium market is pushing one of the world's largest producers of the battery metal to idle its mine. Arcadium Lithium plans to suspend operations at its Mount Cattlin spodumene mine in Australia next year. The company has already paused its Galaxy project in Quebec and delayed part of its expansion in Argentina to cut costs. By shutting down Mount Cattlin, Arcadium expects to save $100 million, adding to $500 million in cost reductions across other projects. Now, Australia's Mineral Resources is also navigating through the weaker market. It's cutting costs to cope with lower lithium prices. But CEO Chris Ellison says there's no need to panic. The iron ore and lithium producer posted a 40% drop in earnings and a 79% decline in net profit for the year ending June. Ellison acknowledged the tough market, but said downturns are part of the cycle. Mineral Resources operates several lithium mines in Western Australia. And that's where we leave your headlines of the week. Bye for now.